edition of Top Tier Profits for Real Estate Investors with Shemie CPA. My name is Matthew Littman, and I'm a senior manager here at Shemie CPA, where we provide premium accounting services to real estate investors to help drive profits and growth. As always, we have our founding partner, the big man, Charles Shemie CPA CA, that is here to join in on my discussion today. What's up, Charles?
Hi, Matthew. How are you doing?
I'm good, thank you. I'm very good. This lovely Thursday afternoon. And I'm happy to be here with you to discuss this topic.
I like your introduction. I'm the big man.
You are. That's definitely the truth. So, I think I was thinking today we could discuss a super important topic for real estate investors, something that really helps drive generational wealth for you and your family. And the subject is trust. What do you think?
Wow, that's like a really big topic to cover quickly, but it's a very important, and yeah, I agree with you. It will provide for wealth for generations. Absolutely.
Yeah, so maybe we'll call this topic an introduction to trust, because of course we could get super complicated into what trust accounting is and all the different types of trust funds, but keep it pretty high level for this discussion, I think. What do you think?
Yeah, sounds good. And after that, if any of our clients or non-clients want to reach out to us, we can go into greater detail.
For sure. We'll have other segments exploring this in more detail as more time goes on, but let's start with the first most important question. I feel like a lot of people think of trust as maybe there's some bad rapport associated with them, because people think that all these offshore trusts in the Bahamas and everything, people are using it to escape Canadian taxes. But what is a trust? Like, what is the most basic definition of a trust?
So a trust is a vehicle whereby your assets would be held by this entity called a trust. And that entity will be able to, with the way you give it the instructions, will be able to disperse funds to your family members or whoever you wish to be included in the trust, which we call the beneficiaries. So that's a basic, very legitimate vehicle. It can be used for tax savings and also for family dynamics, and so that's really what a trust is in the most basic level.
Okay, cool. So who is the prime? Who would you, if you were to create, just a standard real estate investor that you would recommend to trust you? Like, at what stage in your career should you be looking at a trust? Obviously there's exceptions, but as a general kind of client avatar, who would you say is the ideal candidate to set up a trust fund?
I would say if whoever is investing in real estate and that has a family, the sooner you do it, the better, because you want the values of your real estate to accrue in the trust and not to you personally.
Right.
So the short answer is ASAP.
ASAP. Interesting. Okay, cool. So there's obviously the person that's creating the trust. There's the lawyer that's helping the person create the trust. There's the accountant as well. Like, who are the main parties that are involved, or that you need to involve as an entrepreneur when you want to set up a trust?
So on a general level, the trust is just an agreement. Basically, you have it's a lawyer drafts up this agreement. And it could be very standard, and you would need lawyers to draft up the agreement. Then the accountants will the accountants will help to transfer your assets, your buildings that you own personally or through a corporation into that trust. So you would need both. You would need both professionals to execute this mandate.
Interesting. If you and then you mentioned that you have the beneficiaries of the trust, right? So that would generally be your kids, your wife, whoever you would want, and maybe yourself as well, whoever you would need the trust to disperse money to. Is that correct?
Yes, I mean you could do it for your parents. You can include so whoever, basically your family, your grandkids, if you have any. So that's who the beneficiaries would be, and you yourself would be the trustee or the settler, as they call it, to give directions to the trust as to how to disperse money. It could be on a monthly basis, on a yearly basis. So so you could give. It's a great way of splitting income legitimately, because you could pay dividends to your children who are over 18. So you can have income in there. So if they have expenses, their school expenses or whatever type of expenses, you could give them the money through a dividend via a trust, and that's the way to split income to the family members. So that's used a lot to do that.
Interesting. So is that why trusts are viewed as such a great tool to create generational wealth? Is it because of the split income? What makes it such a great tool for generational wealth?
I mean, that's one of the advantages of having a trust, is to split your income and to give dividends to various family members. And I say one of the biggest reasons is that you can defer your capital gains on your buildings, because as you know, we all have to pass away. So when we pass away, there's what we call the deemed disposition or a deemed sale of your buildings, and your estate would be hit with adverse tax consequences. If you were to have this in the trust continues to live on after you pass away. So you'll be able to defer your capital gains on the buildings until the point where you would have to sell the buildings. If you decide to sell it, then the trust would incur the capital gain. But if you intend to hold on to your real estate for a long-term basis, or any other assets for that matter, so then the trust would be a great vehicle in doing that.
Yeah, I mean, this what you just mentioned makes me think of a story client that we've had at the firm who had a trust fund set up before her death that we worked on together. Unfortunately, she passed away, but I don't think she had to pay $1 of income taxes on her death. You remember the client I'm talking about?
I think I know who you're referring to, and yes, that was the case, because we set up the trust for her well in advance.
And in comparison to certain other clients that have unfortunately passed, that didn't take advantage of this tax planning opportunity, or that have come to us, their families come to us after the time they're passing, and you just see these massive tax bills that
and the problem is, you still own the building. So when the person who owns the building passes away, the family members have to come up with the tax to pay the government. But they don't have the cash because they haven't yet sold the building, and so they're in a cash flow dilemma, and many times they're forced to sell the property so they can pay the taxes. I call it the death taxes.
Totally. Yeah.
So that this is one way of avoiding it. So basically, you accrue all of your wealth in the trust, and you'll be sheltered from having that adverse tax consequences from when you die.
Yeah, I 100% agree with you. This is the key way of building generational wealth, and people think that that a trust may be appropriate after you reach some crazy level of net worth, but really you could shelter if you could shelter $1 million gain, um, and defer that gain for over 20 years. I mean, that in and of itself could very well justify the costs that are associated with setting up a trust and maintaining it. Do you agree?
Yeah, absolutely. And when young entrepreneurs come to my office for advice, and they want to buy their first building or their second building, I really try to help that. I try to recommend to them to set up the trust. It's not a huge amount of money, a couple $1,000s, and we do it properly. And you could, they'll thank us at the end.
Absolutely, I totally agree. I mean, I think that we covered kind of the most important point that I wanted to communicate to our audience about trust, aka like the ability, just a massive tax planning opportunity that they provide, and a very useful tool in the Income Tax Act.
By the way, Matthew, there's a lot of other benefits that we didn't mention. Maybe you can call them secondary benefits. As you know, if you're an American citizen and a Canadian citizen, you have to file U.S. taxes. The tax laws now in the U.S. are really quite cumbersome, especially when it comes to Canadian citizens. And you'll end up paying a ton of taxes to the U.S. If you own the properties, in your name, or even through a corporation.
Absolutely. I mean, there's so many benefits and trusts are such a useful tool that we have in our arsenal of income tax planning tools. But I just wanted to, on this segment, I just thought that we would just really highlight that benefit, and we could explore future benefits like cross-border taxation issues and how trust could help with those, help mitigate those tax obligations and tax liabilities. But I figure we should save that for another day.
Sure. I think it's a lot of information that we gave to our members, but it's just unfortunate that most accountants don't emphasize this issue, and I firmly believe it's one of the most important tax vehicles and estate vehicles that you can have to help you mitigate taxes.
Absolutely, I agree. It's a complicated issue. You need to have competent professionals working on your side to navigate all of these issues and make sure you take everything into consideration, but worthy of pursuing, and 100% legitimate and vetted by the CRA Revenue Quebec. It's completely kosher.
Oh, absolutely. We would never recommend anything otherwise. So
yeah,
it's a standard tool. I didn't make it up. I wish I was that smart to have made it up, but it's, I learned it, and it's a standard tool. And like you said, it's very, very legitimate.
Okay, so I mean, I think we covered the main points. I think we could call it today. Do you agree?
Yes, absolutely.
Okay, great. So, ladies and gentlemen, thank you for spending some time with us today and learning more about this super interesting topic. Charles, thank you very much for joining us again.
It's great seeing you again, Matthew.
Yes, always a pleasure. Always a pleasure every Thursday. And remember, our audience, remember, if you need any more advice on real estate investing, or if you have any questions related to real estate, you can book a call with us using our meeting links, which are readily available in the description below. And until next time, have a great week and happy real estate investing.
Take care. Bye-bye.
Bye.